Good evening. It's Sunday night. Hope you had a great weekend. Hope you're able to relax, take a break from the market. The market is on hold. This is the futures, the S&P 500 E-mini futures, and you can see that we haven't really moved. Oops, we haven't really moved anywhere over the last few weeks. Basically, since this time, just going absolutely sideways. Let me show you the S&P 500, which is going to be a little bit better picture. There's the S&P 500. You can see that we've gone absolutely sideways. Why is the market going sideways? The market's going sideways because the market wants to see where where the next big hit is going to come from. How is Washington going to hit it? What kind of stimulus package? This all started with a series of major news events that were coming in, such as the election. Is Obama getting elected, or is the McCain going to get elected? And then the TARP. How's the TARP going to affect? And now it's going to be another stimulus package, another spending package, whatever you want to call it. The market wants the certainty. The market does not want the uncertainty. Is the stimulus going to work? Is the stimulus not going to work? Whenever we see what kind of package they actually come with, then we'll be able to decide, is this going to stimulate the economy? What part of the economy is this going to stimulate? What part of the economy is going to recover first? What part of the economy has gone down low enough that now it's becoming value, and then they're going to be able to invest in it? Now, the stimulus package, as we know right now, is not complete. There's about a 37% approval for the stimulus package, whatever you want to call it, whatever kind of package you want. It's so full of pork that that's why people are having problems with it. And what I don't like about all this stuff personally is the American people have to have faith in the government. The American people have to have faith in Congress, in the market, and so on. The more pork is in it, the more arguments are on it, the less faith they're going to have in it, the less confidence they're going to have in it, and the less effective it's going to be. This is a crisis of confidence, and I really wish they would come in with confidence and would help boost confidence, and not argue about frisbee parks. Anyway, S&P 500 is bouncing off support, which is really nice to see. We have a bottom over here, we have another bottom over here, we have a higher bottom over here, which is great. We might be going up. Now we have a couple of resistance levels. The 850 we broke. 920 is our next resistance level. If we break that, then we have 1,000 and so on. But the nice thing about that is whenever we break these levels, we are making higher bottoms and higher tops, which actually creates a new uptrend. I am not really expecting any kind of major moves out of the market until this stimulus package comes through. So when you look at this chart, try to coincide it with the news that's coming out of Washington right now. The last few weeks have been very, very tough trading, and the reason why they've been tough is because the market really hasn't gone much. Hasn't gone anywhere. Here's an hourly chart of S&P 500, and you can see how every move was very, very choppy. We penetrated up, then came back down, then came back up, then came back down, then came back up. Very, very choppy, and trends are not really sustaining right now. That is the short-term look on the market. But our look right now is changing. We're changing from the short term, from the hourly charts to the daily charts. And the reason why is things like this. This is the XLF. XLF is the S&P Select Financial Spider Fund. It's an ETF. And what I'm looking at is the fact that here's a bottom and here's a higher bottom. If this pattern continues, we could have an uptrend. We could have a change of trend. Here's another great example, and that's in S&P 500 home builders. And notice that the home builders are turning back up. Maybe this is a sign of things to come where we can start investing, not just trading the market, but actually investing in the market and looking at it on a very long-term basis. Here are the spiders, for example. SPY. SPY, if you look at the support level, which we're holding, if you look at the higher bottom, and if you look at the fact that it could start going up, why is this so interesting? Let me zoom out a little bit. You can see that the spiders used to be at 150. Now they're sitting at 86. If they go from 86, 87, 88, all the way up to just 113, which is the 200-day moving average, the red line, that is a tremendous amount of profit. That's a 20, 24, $26 trade on an $86 stock. That's a 25% return. And how long could that happen? That could take, basically, if you look at the history, it could happen quite quickly. These two moves took a little bit over a month, which means that if the market starts moving on the long side and you invest in it, you could have the potential of making 25% profit just on the bounce back. That's the interesting part. There's USO. USO is the United States Oil Fund. Yes, oil is going to come back up. When? I don't know. But when it does turn, this is something that you want to be in because of the profit potential over here. Again, this is around the $31 level. If it goes back up to 50, if it goes back up to 60, that's double. That's a double on something as conservative as an oil fund. It's actually it's an ETF, and there's so much upside potential over here that it could work out pretty well. What am I waiting for? I'm waiting for the market to actually confirm. I'm waiting for the market to get stronger. I'm waiting for some kind of decision out of Washington, and I'm waiting for a sign out of the market. What do I mean by a sign? Imagine that the market is in an intersection right now. There's the intersection. Is it going right or is it going left? There's a line. There's a line over here. There's a line over here. I know that if it passes this line, it's going right. I know that if it passes this line, it's going left. Now, I can try and guess which way the market is going to go. I can try and guess the direction. Or I can basically put up strips, sensors right at the intersection on the right side and on the left side of the intersection. And whenever the market actually crosses over, I know which way it went. It is much easier and it is much more efficient way of trading the market. So that's what I'm looking at right now. I want to see the market start to penetrate resistance levels like the 922, for example, and then I'll know that I'm in for a long-term uptrend. And so on. If we break the 800, of course, we're in for a disastrous downtrend, which we're of course planning on taking advantage of because that's what we do. We're hedging. Using the stock market. So anyway, I hope this inspires you to start looking at the stock market and start looking at the opportunities the stock market is presenting. If you are looking to invest in real estate, for example, you can buy a house, you can go buy a house and invest in real estate, or you can buy the home builders. Now, what's the difference? The difference is that if the home builders, if the market comes back even just a little bit, just to show you what the home builders used to be, let me actually go weekly charts. This is even more interesting. Okay, weekly charts on the home builders. 45, it's down to 11. If it starts turning around and you start buying and buying and buying, and it goes up to 25, you doubled your money. It's very hard to do it with a house. So there's definitely lots to be made over there. If oil prices are going up, for example, your gas prices are going up, you buy the oil and you buy it off the bottom, it comes back up, you just made up for lots and lots of tanks of gas. So anyway, stay tuned. Come into our daily service and you will see the stocks that we're picking in order to take advantage of all these changes that are going through that could really help you out. Anyway, have a great week, and I will talk to you next weekend. Take care.